Hello and a very warm welcome to Policy Watch, our weekly program that keeps you abreast of all the major economic developments of the week. Today we'll be discussing what the papers have been full of all this week, the rupee, or rather the dramatic fall in the value of the rupee and its effects on the macroeconomy. We'll also take a look at what's been happening in the global arena and put our rupee woes in the global perspective. We'll close with a story on a move that the government was reportedly toying with and may yet see the light of day but has been shelved for now. A higher tax on the super rich. And joining me in these discussions is Subhomoy Bhattarcharjee, Deputy Editor, The Indian Express. Welcome to the show, Subhomoy. After starting the week by falling to a record low, the rupee continued its fall throughout the week. By Thursday, it had fallen below 65 to the dollar, touching an intraday low of rupees 65.65 before ending at rupees 64.60, compelling the finance minister and the RBI governor to assert in separate press conferences that the market had overcorrected. While the FM said that the rupee was now undervalued, the RBI governor was emphatic that the bank had resources and the means to manage volatility. India's forex reserve stood at $278.60 billion as on the 9th of August, enough to meet 7 months' import requirements. The finance minister also alluded to the fact that the problems on the currency front are not unique to India, but are part of a global phenomenon. Following the FM's attempt to talk up the rupee, the currency opened stronger on Friday, but then again lost ground. Is the panic overdone? Even as the rupee fell to record lows, it was not alone. We'll discuss all this at greater depth, but first, this Bureau report.
The rupee depreciated by more than 5% this week. Concerned by the volatility in the currency market, Finance Minister P. Chidambaram declared that the currency was undervalued and had gone below appropriate levels. He also tried to allay the apprehensions of investors by asserting that there was no need for pessimism.
We are confident that stability will return to these markets and we can get on with the task of promoting investment and growth. Therefore, there is no cause for the panic that seems to have gripped the currency markets and that is feeding into other markets.
With steps taken by the government and the RBI over the past several weeks to curb volatility in the forex market failing to give desired results, the finance minister promised more steps.
Some measures taken recently by the Reserve Bank of India have been the subject matter of different interpretations. We wish to make it clear that these measures were taken to reduce volatility in the markets and to quell speculation on the Indian rupee. There was and there is no intention to introduce any type of capital control, including controls on repatriation. It is not the policy of the government or the RBI to resort to capital controls or reverse the direction of capital account liberalization. The measures that were taken last week will be revisited as stability returns.
The rupee's decline continued after persistent demand for the dollar from banks and importers in view of sustained capital outflows. Month-end demand from importers also aggravated the problem. Analysts expect the volatility to continue for a while.
Indications are that very soon by the year end and earliest in the next month they may stop their purchasing of bonds. So it's a negative news for not only India but overall emerging markets, because then the liquidity will dry up and basically as far as India is concerned, the capital flow, incoming capital flow always bridge our trade deficit, current account deficit. So this is going to be a problem, and that's the reason that we have witnessed the fall in dollar, fall in rupee vis-a-vis dollar. As far as markets are concerned, market will remain very volatile.
Meanwhile, given the current situation and RBI measures to prop up the currency, private sector lenders have raised their rates by 25 to 30 basic points. Bureau Report, Rajya Sabha Television.
Subhomoy, if you look at the way the rupee has fallen, and broadly everybody feels that there are two main reasons. One is the external factors and one are the domestic factors. Let's take the second one first. As far as domestic factors are concerned, what do you think really explains the way the rupee has fallen, if you look at domestic factors?
Yeah, I mean domestic factors where, the basic problem is that we have gradually over the years, and I think this is something that you have also discussed in your earlier issues of Policy Watch, there have been so many steps which the government needed to have taken and which had not been taken. For instance, today my newspaper carries the report that Nokia, for instance, is saying, a company which is invested in India, saying that we think we want to consider whether we should go out of India. That doesn't come suddenly. It's something, these are the result of policy decisions taken and those which should not have been taken, which have exactly led to the problems on which the rupee played on.
So, is it a question of governance, wrong policies? Because after all, we have in the past 1 year, the government has tried to open up foreign direct investment in a number of areas. So, is it that we acted too late? What really is the problem?
Yeah, let's look at it this way. The RBI monetary policy usually doesn't give isn't very dramatic. It's very, very matter of fact statement. But there itself, I find a very interesting statement saying recovery has to be earned for the Indian economy to come back to a higher growth rate. Now, and very well, for a central bank to use such words is very strong language.
So, what do they mean by earned? What do we need to do to earn it, as it were?
I suppose the first thing is that, first of all, none of the problems that ail the Indian economy will go away in a hurry. We need to see what are these steps which need to be consistently pushed. If we are talking of subsidy regime change by pushing to nutrient based system for fertilizers, that needs to be done. Incidentally, there was a reversal of that recently. The government was saying that we will go back to price fixation, which is not a good sign at all. We need to keep on pegging away at cutting down the diesel prices, the diesel subsidy. These are two of the major things. Along with that, we need to ensure that investments, which are basically those which will need to be propped up by giving clearances, are pushed consistently. As of now, even the RBI paper says that the Cabinet Committee on Investment results will start showing not before 8 to 9 months.
So, the idea that the fall in the value of the rupee is temporary may not be quite correct.
Absolutely.
So, until the current account deficit corrects itself, we will see perhaps further falls in the value of the rupee?
Well, maybe, the point is, after all, the rupee is responding to the demand and the supply. If the supply is more or less, it's been mopped up by RBI over the recent measures. So, the supply definitely has come down to a fairly low level. The demand is going, if the demand doesn't rise because investments and others have not really picked up, then the rupee shouldn't depreciate. But the very reason why demand would rise could lead to an interesting situation where the rupee could start correcting. So, we will essentially have to look at triggers from the real economy to ensure that the rupee
So, we will look for triggers from the real economy, but on that note, we will take a very short break, but please be with us. We will be back very, very soon. Welcome back. Well, we've been discussing the factors, the domestic factors that led to the dramatic fall in the value of the rupee, but there are a lot of other factors also which were not entirely in our control. India is not the only country which has suffered a sharp fall in the exchange rate of its currency. All over the world, particularly emerging market currencies, have fallen. We now take a look at what are the external factors that have led to the fall in the value of the rupee versus the dollar. Let me ask Subhomoy, what are the external factors? Subhomoy, is it something that is entirely only of our own making, or is it, as the FM said, that India is not unique? Many other countries, particularly emerging market economies, are facing the same problem. What really are the factors responsible if you were to look at the external factors?
Yeah, he's true. I mean, he's correct. If you look at the Real, it has fallen more than 15%. If you look at the South African Rand, it's gone down around 9%. If you look at the peso, that too has done pretty badly, the Mexican peso. So, essentially all the emerging market economies are suffering the effect of gradual withdrawal of the easy dollar. Definitely that's going to be, I mean that is the prime reason why the disturbance in the world economy in the currency markets have occurred.
Except that the Fed has not, US Federal Reserve has not yet started tapering. They're just talking about it and they haven't even given a firm date. So, if this is what happens when there's mere talk that we are thinking about it, what will happen when they actually start the tapering?
Yeah, that's the question which everybody is sort of figuring out. But I would think that probably that, the market tends to discount and it is the approaching storm which they've already discounted. So I don't think when the Fed actually starts getting away, doesn't pump in $85 billion every month into the market, there will be any further stress that will develop, because the reactions in terms of the currencies going down have already set in. Many of the economies have started corrective measures. So I don't think that the situation would drastically change. The damage which has had to happen has already started happening across the world markets. So I wouldn't really say that that is the post September, let's say, if this Fed does this sort of stuff, it will really change and or rather push the markets into further set of turmoil.
So you don't see portfolio investors pulling out of India?
They have already, between May and now, they have already they have already moved out around $11 billion.
Substantial, but they could pull out more.
They could, but then at the same time, there isn't, considering the fact that the rupee has already gone down, there are investors who are also looking at companies, specific companies. Yesterday we had Mark Faber saying that I am bullish on, say, the consumption sector, the FMCG sector. Now, obviously, those investments stay on. Then there are other companies where people might be interested on. So I don't think it's going to be a general pull-out, a general herd. Whatever had to happen has probably started already happening and has happened to a considerable extent.
So you think we've seen the worst of it, except for the fact that if you look at emerging markets, yes, many of us, we're all sailing in the same boat. But if you look at India, Indonesia, South Africa, we seem to be worse off. We're the outliers, whereas countries like Thailand, Malaysia seem to be faring better. What did we do wrong that those people did right?
That's right, Mythili. I mean, the point is we are the outliers. And the reason why we are the outliers is because we didn't do anything much, as we discussed on the domestic issue, and we don't have the advantage of a current account surplus. We don't have commodities which we could have banked on. We don't have a very robust export market which would have held on, and the economy, as you pointed out, wasn't really at the best of health. So those three together have been the reasons why Indian economy didn't show any sort of silver lining in the middle of whatever was happening. Many of these other economies like South Africa had gold, Brazil used the commodity boom to copper and others to move out. So Russia has its reserves of oil. So those economies are able to therefore stand up against the depreciation, and there are some corrections. Here we didn't have any such thing. At one time our growth rate was our biggest corrective factor.
And our large population, the demographic dividend as we called it.
And that was the reason why the investors were coming in. Now we have discounted both those. Our population is not getting trained and the growth rate has fallen off. So it was the storm against which we left ourselves defenseless.
And the fact that we have elections coming up doesn't really help. I guess political uncertainty also makes a huge difference, right?
Certainly.
So do you think investors, especially foreign direct investors, who are what we are really interested in, because in fact many of our problems are because we were more dependent on portfolio flows rather than direct investment with all its externalities. So do you think these people who are going to invest, the foreign direct investors, the likes of Suzuki, etc., you think they'll hold back, wait for the elections, see what happens, in which case we have a longer period of pain?
Mythili, you're right. I mean, one thing that will immediately happen is, even if there was a FDI guy planning to come in, one of the first things that she or he would look at is which way the currency is going. The currency market volatility, I think, is a new factor which will affect FDI for some time, because you would want to figure out which way the currency exchange risk would work out.
Absolutely.
So unless stability returns there, I don't think the actual flows of FDI would really start peaking. If they would wait to get that sense. Of course, remittances and NRI investment, those would, in the banking sector, those would of course rise. So to that extent, that's a better thing. But FDI, I would think the real action would start a bit later.
Okay. There is this view that having taken the RBI government, they've taken so many steps. After all, import duty on gold has gone up 5-fold, and it doesn't seem really you have to have stopped the rupee from falling. So there is this view that maybe you shouldn't have done anything, or is that we don't know the counterfactual? Which one is correct? So can the government and the RBI say, okay, hands off, let the rupee find its own level, or are there some real economic consequences to a sharp fall like this?
Yeah, that's a point. I mean, yesterday Governor Subbarao was saying that, after all, there's there's no counterfactual, that what would have happened if RBI had not stepped in. But at the same time, we also seen what happens when RBI sort of didn't communicate well the Wednesday's measures to suddenly impose a bit of a capital control, no matter whatever the finance minister may be saying. There were a bit of capital control, and that did trigger a panic reaction. So yes, RBI measures did have a negative influence. Not all of them, but some of them did. So yes, there is a problem there. Should the RBI have let the rupee slide? Well, let's look at it this way. We don't give any interest rate advantage to our companies. We don't give any labor advantage to the companies. There is no, land is a problem in India.
Environmental clearance.
Environmental clearance, and we charge some of the highest rates for energy consumption in the world.
Absolutely.
For the commercial sector. Given that a weaker rupee is probably a good news for the companies across the board, no matter, even if they are importing. I would think that at a substantial discount, substantial way in which the rupee has come down from 54 to 64, 65 now, I think is a huge change, which probably may be a very, very major game changer for India going ahead.
Our exports will become more competitive.
Certainly, and even manufacturing also. I mean, there will be much more guys, much more interested in getting a bang for the bucks, because now every investment costs substantially lower, whichever has a foreign component to it.
There's often this argument that markets are too short-term in their outlook, and it would seem to suggest so, because actually if you look at it, when the Federal Reserve withdraws its tapering, they are going to do it only because the US economy is recovering strength, and that is actually much better in the long term, because you could not continue artificial steroids for indefinitely. So why is the market not focusing on the recovery in the US, the recovery in Europe, and focusing only on the fact that this, the QE is being withdrawn? Is it something to do with the way markets operate? Is it the need to educate markets? How does one put it?
No, I suppose a million people can't be going wrong. I mean, so obviously they know what they are doing, and I wouldn't say that, so there's no way we could say that they don't know what's happening. And you could see the markets, if you look at the movement of the stock exchange over the last few weeks, it has gone down, but it's also recovered.
Absolutely come up.
Yesterday it recovered, today also it was in a recovery mode. So essentially the markets, it's not that the markets don't know that yes, there are good things to pick up from the debris. What is happening is that since the cost of playing in the Indian market has become costlier, because most of them use foreign money to be able to invest here, that has made the market overall bearish. So that is something that will have to be sorted out.
Okay, so that means there are some short-term pluses, minuses, long-term pluses and minuses. On that note, we'll take a break, but please stay with us. We'll be back very soon. Welcome back. Faced with the prospect of rising subsidies and falling revenues, the government is contemplating a higher tax rate for the super rich. The proposal is part of the new direct tax code that will replace the present Income Tax Act. It will add one more tax slab to the existing three. Now, while the move to tax the super rich might seem like a relic of the past, India isn't the only country to consider it. Countries like the US and France hiked the tax rate on the rich soon after the global crisis broke. Ironically, it was the present finance minister who in 1997, in his dream budget, had drastically reduced the tax rate. But the question is, will taxing the super rich bring in more money into the government's coffers, or will it only lead to more tax evasion? Well, at the moment, the government has decided to keep that on hold, but sometime in the future, if our problems continue, that might happen. But let's first hear this bureau report.
Higher taxes for the rich are a part of the direct tax code bill that was referred to the Standing Committee of Parliament. The specific proposals are a 35% tax for people earning over 10 crore a year and a higher wealth tax rate for those with wealth over rupees 50 crore. Let's take a look at the rationale for this. In his budget earlier this year, Finance Minister P. Chidambaram raised the surcharge for annual income exceeding rupees 1 crore. Going by the total tax returns filed, that affected some 42,800 individuals, the figures indicate that only a few thousand income taxpayers earn over rupees 10 crore. Nevertheless, they actually account for a significant portion of the tax revenues. For instance, in 2011-2012, only 1.3 lakh taxpayers had individual incomes of over rupees 20 lakh. But together they accounted for 63% of the total personal income tax collected. The Standing Committee suggested many amendments to the bill, including raising the exemption limit to rupees 3 lakh from the existing 2 lakh. However, the Cabinet is unlikely to agree to this. Currently, incomes up to 2 lakh rupees are tax-free, while incomes between 2 lakh and 5 lakh are taxed at 10%, between 5 lakh and 10 lakh the rate is 20% and above 10 lakh it is 30%. Bureau Report, Rajya Sabha Television.
Subhomoy, it's always very often been argued rather that the present UPA government is very socialist in its thinking, and they've gone back in many ways to the decades of the 60s and 70s. Is this tax on the super rich also part of that?
Well, coming from where they are, it would look that way. And not just this, you know, if you look at also the wealth tax,
Yeah.
which is actually something which we had looked at in the era of the 50s, we gave it up and then bringing it back. So yes, there is, it's a question of, you know, when if Sarkozy introduces a super tax, that's okay, but when Holla does it, and he ran into rough weather. So it depends on where you stand about where, what you can impose.
Okay, except that the tax GDP ratio in India is not only is low when compared to other countries at our stage of development, it's also been falling. So shouldn't the really rich, I mean 10 crores, 50 crores, these are large sums of money in a country where we've seen the kind of, you know, per capita incomes for poverty levels. So is there not a case, 30% for somebody owning more than 10 crores, is it too much to ask?
No, it's not, but the question is whether we can actually tax it. Right now, with the sort of infrastructure that could be made available to the income tax department, it's a shame that they are still not able to track the network of income that goes on across the country. Now, that's ridiculous, and that's the reason why people are able to get away without having to pay a higher tax. Even the 30% tax, the numbers that is there obviously are pretty low, and the reason why they are low is because we don't track them adequately. So, and this is something which even Chidambaram has been saying for years. It has been moving up, but the collection, but the way the tracking system has been working is still very, very slow, and that is where the trouble lies. So, even at 35%, it's, I mean, sure enough, I mean, a person getting above 10 crore rupee can pay 35% tax, no issues. But do you get the income? Do you get the tax? That's the point.
There are two arguments against this. They say that, you know, okay, we're willing to pay tax if the government gives us services. You know, we're paying for public services, we don't get that, number one. Number two, is it because civil society is also to blame? Because, you know, there's no sense of that we need to comply. That is not there. At the same time, how much of it is because of we lack that culture of paying our taxes honestly, and how much is because of poor tax administration? Would you say it's 50-50, or would you say that it's, well, it's our duty as citizens to pay our taxes?
Yeah, I mean, the argument that, you know, I need to get services, so I'll then pay tax is I mean, it's a no-hopper. And that really, I mean, if taken to its limit, there will be nobody who will be paying taxes. So I don't think that's really something over there. About the other fact that the tax administration is weak is exactly the problem. That income tax department, how much of it has it benefited by being able to increase the number of people that it has and being able to track the systems better? There's no study there. There's no independent study.
So you're saying that basically the tax administration needs to do its work much better. And I think with that, I think, Subhomoy, we do come to the end of this program. Time is running out. So I'll call it a day. But before we take a break, key takeaways. As far as the rupee is concerned, the fall is hopefully temporary, and as the efforts made by the government to tackle the current account deficit take root, maybe, and as the global economy improves, maybe the rupee will return to a more stable level, at least the volatility will cease. As far as higher rates, tax rates on the super rich are concerned, yes, those who are very rich in a country as poor as India do need to pay more, but a lot needs to be done by the tax administration too. And with that, we come to the end of this program. Thank you for being with us, but please remember, we'll be back same time next week. Till then, it's goodbye from all of us at RSTV.